Okay, perfect. So good evening, everyone. My name is Denisha McDonald, representing a whole bunch of organizations, I guess, tonight. Will be for Saige on Fountain, Thumbprint Realty, and Our Village Initiative. We have our credit specialist as a guest. Well, she's in attendance tonight for Kings and Queens Consulting, Ms. Whitney. And you guys will get to know her over the course of the next 90 days to help answer your credit questions. So why are you guys here? Some of you are here for the 90-day challenge to figure out, how can I buy a home? What's the process? I'm ready to get started. What next? And some of you are here more specifically for Saige on Fountain, right? And what is Saige on Fountain? For those of you who don't know, we're going to go over it through this presentation. So this is our Homebuyer Success Team. Again, it's the 90-day challenge team members, which is a partnership between Thumbprint Realty, Kings and Queens Consulting, and Our Village Initiative. And then Saige on Fountain, for those of you who are at that presentation, that's a partnership between the developer, Thumbprint Realty, and Our Village Initiative in terms of getting you guys prepared for this specific opportunity. So what's the purpose? Well, it's to help those of you who are like, I'm ready to go buy a home today, but I don't know what to do. Or those who are saying, I want to buy a home, but I know that I'm not in a position to buy right now. Can you help me? And this is designed to be more advanced than just the home buyer class, which you do have to take for the certificate. That's an 8-hour class. This one is more specific to getting a pre-approval from a lender to say, I trust you to loan you hundreds of thousands of dollars so you can buy something, versus the home buyer class through the city is more of a, what's the home buying process and who are the people that need to be on your team and what is this, and the bigger picture. But the bigger picture doesn't matter if you don't figure this out, right? If you don't have the funds, you can't buy the house. So picking the team doesn't matter because I can't even get past step 1. So that's the purpose of our meeting or the 90-day challenge. And it's to help you guys. If your credit isn't where it needs to be, we're going to help you get it where it needs to be. I don't put my name behind a lot of things or a lot of people, but Kings and Queens Consulting, I'm gonna put my name behind that. They are amazing in terms of helping people actually repair their credit. And then if you have limited savings, we're gonna go over your budget and help you get right so you can save enough, and then help you with your debt. So essentially, you can think of us as the Reddit of real estate, right? So our team, any questions that you have, feel free to send us emails. You'll be entered into the Facebook group, ask questions in there, because if you have a question, that means someone else probably has a question, right? So make sure that you are engaged. As much as you put out, it gives us more to help you guys, right? So we have information that we're going to share, but maybe you have those little nuances and those special situations where when you share that, it might have one other person who has the exact same question. Now we can answer that and help them as well. So what are we going to cover over the next 90 days? And it's not, someone put in the chat, why is it just a 90-day challenge? For some people, it's going to be a 30-day challenge. For some people, it's going to be 90. And for others, it might be 10 months, right? It depends on, and that's why we're doing it, where you are. So you're going to go through the exercises and get kind of do the assessment so we know about how long it's going to take to get you to where you need to be so you can purchase a home. That's the goal of it. So it's called 90 days because if you commit to yourself and you commit to us and putting in the work for 90 days, you should see improvements in your financial profile for when you go speak with a lender, and you have a plan, right? So you know what you need to do. So as long as you stick to the plan, we should get the desired results, but you control that. It doesn't matter how much information we present, how much we give to you. If you don't do it, it doesn't matter. So it's really your commitment to yourself, and we're asking you to commit for the next 90 days to work with us so that we can get you in position. So we're going to go over your purchase plan and the timeline. So what is the timeline for a typical transaction? What is the timeline specific to Saige on Fountain, and thinking of a lottery, and what does that look like? Going over credit assessment. So what's your credit? What are the blemishes on your credit? What are things we can do to help you improve your credit? A savings plan. People don't like to use the word budget, but we all need a budget to make sure that we're saving adequately. So we're going to work with you to create a savings plan, and then help connect you to down payment and closing cost assistance programs. Anything that we find that can work for you, connect you to those. In our presentation on the 19th, we talked about the $50,000 from the city of Boston, specific to the Saige project. And that is a combination of down payment and closing cost assistance in addition to an interest rate buy down. So they kind of throw the money at those three pots to help get you to a price point or a monthly housing cost that works for you. And that number varies by person. It depends on need. So not everyone gets $50,000. Some people may get 20, some people may get 30, some people may only get 10 or 5, right? It's dependent on your need. And then we're going to go over what are the different types of loan products that could work for your situation. Again, some people are at different income tiers, and there are different loan products depending on your income. So we're going to look at that as well, so that you can see and better understand, like, what are my options? And we want to make you aware of that, so that when you're speaking to lenders, if you feel like they're pushing you towards something and not, to all the others that, you should qualify for, you can ask them, why is it that you didn't tell me about XYZ? And they have to explain that to you. So we want you to be prepared and knowledgeable to have those conversations. And then lastly, we'll talk about the sales timeline. If you guys have questions anytime in here, I'm going to try to slow it down a little bit. I know I talk fast sometimes. Let me know. I want you to ask questions. That's really what today is about, so that you guys are informed, you understand what you're going to be doing over the next 90 days. If you decide to move forward with us or not. And then again, we just get to work, right? So make sure you're asking all your questions. So why is credit important? Because of COVID-19, a lot of lenders have what we call overlays. So they've tightened up their lending requirements. Some of them have started easing up on it now, but it's still pretty strict, where they want a minimum of a 620 credit score. Yes, FHA, for those of you who know, goes down to 580 and even below that, but it's up to the lender if they want to take that risk and trust someone with that credit score with such a large amount of money. There are some lenders who do, but most of them do not. They want at least a 620 credit score. And for this particular, there is a loan product that really is the best product out there for Saige on Fountain. They have a requirement that you need to have that 620 to 640 credit score range. So our goal is to get you guys at least to there, so that we know you qualify. And then negative items or hard inquiries can hurt your credit score. So we're going to work with you to get those items removed. Because sometimes you may be paying everything on time, but a mistake that you made a few years before, it still shows up on your report. The lenders care. And we don't want you to, go through the process and then they deny your loan at the last minute. So we want to be proactive instead of reactive and address those issues as we identify them. And that's because lenders want explanations, right? They want to know why. I'm going to stop just to read to make sure I'm going along here. Okay. So some people believe that you have to save 20% to buy a house. So they're not even trying to start the process until they have 20%. That is a myth. You do not need 20% to buy a house. There are tons of different loan products and programs out there. Some are 0% down, so you don't need to put any money down. Some are 3%. There are some where you're only responsible for 1.5%. So there are a lot of different loan products out there. So we'll again go over that with you, the pros and the cons of each as well, so that you feel more confident in what that looks like. Specific to Saige, I think you guys are going to be pleasantly surprised or excited about the numbers that you need to meet to purchase one of these units. And then we believe that you know, in the process, you're going to have to identify what your savings target is, because if you don't have the target, you don't have the motivation to reach it. And we want to make sure that we have the right target and that it makes sense, and we can give you an outline of how long it should take you to get there if you stick to the plan. Okay. So did I put it? Yes, I did. So for Saige, we have the down payment amounts. I took the time to write it out, and I think I did it on each slide again, so you can see it. So we'll go over that then. So depending on the sales price, you can come out of pocket, and this is for your down payment, $2,500. So for $2,500 saved, you could purchase a studio. That is less than you would pay for first, last security broker's fee if you're looking for a rental unit. And that's if you had to use 1.5% down. That's as little as you have to pay. If you have to do 3%, then it would be double that amount. So that's $5,000 that you would need to purchase a studio unit. And it goes all the way up to $8,300. And that's going at the 80% if you were to purchase a 3-bedroom. So between purchasing a studio to purchasing a 3, you need between $2,500 and $8,300, and you own it. Ooh, excuse me. And then at 100% of AMI, you would need between $3,300 and $10,000 to purchase between a studio and a 3-bedroom unit. So again, these numbers are for, as far as down payment, it's based on purchase price. So it's always where we need to know what's your price range that you'd qualify for, and then just do the percentage. It's just a calculator to do the numbers, because that's pretty standard. So that's how we can help you figure out your savings target. This is just for down payment. We're also going to have you guys save a little bit more so that you have enough for closing costs. Yes, there are programs out there to help you, but we always want to aim for more, because now that just becomes your emergency fund, right? In case anything happens with the house, whatever you don't use, you save it. Don't go buy furniture, you save it, okay? And then something that I think a lot of people overlook when they're thinking of buying a home is their debt to income ratio. And that is when they look at how much debt you have every month that you're carrying, or that you're responsible for paying, versus how much money do you make. And I think a lot of us, we make ends meet. So our debt might be astronomical, like it's really high, but we make it every month, right? We don't miss a payment, everything gets paid. To the lender, they're going to look at that and say, you have way too much debt. We can't even add a mortgage onto this because it's going to take you over your kind of what you can afford, or what we think you can afford to pay. So we're going to start looking at your finances like a lender would look at your finances to make sure that you get that pre-approval. And I think a lot of us just haven't paid attention to it before, and it's really important. It also lets you know about how much you can kind of predict about how much they would approve you for, because your housing cost is a percentage of your income, right? And usually they have that around 30% of your income, where that's how much they allow for your housing. So you can start to figure out, you know, what would they pre-approve me for, and where would that send me? Would I be in Boston? Would I be in Brockton? Would I be in Springfield? Like, where am I looking? So this is what lenders look at. And we want to make you guys aware and walk you through that process so you can start thinking like them, so that when they ask you things, or, you know, they say certain things, you understand it. And then again, we're going to review with you guys the different loan products that are out there, who has the best interest rate, who has the most flexible guidelines. So if if you don't have the credit for one loan product, maybe you can still qualify based on another loan product for the sales price or the purchase price that you need. So kind of looking at all of your options and picking the best one for your situation. And then looking at lenders in terms of who offers the most buyer support. So if you know you have a lot of questions or you're going to ask a lot of questions, which lenders are able to help you? Because some of them, they issue the pre-approval and the customer service, they're probably not going to always answer the phone, or it's going to be really short answers and you have more questions. So connecting you to the professionals who are going to take the time to actually answer those questions. And we base that off of your personality as well. So if it is where, you need more hand-holding, there's a lender for that. Or if you're like, I get everything in right away, it's pretty straightforward, I get it, then you can have one of those lenders where it's like they issue that pre-approval and they go through the process, but there's not a lot of talking, right? So we want to make sure we connect you to the right one. Someone asked in here, how will student loans affect your pre-approval? So it does. It factors into the amount right now. If you are in forbearance, I think they take 0.5% of your loan total. If not, after April, they're actually going to go back to whatever your payment is, right? So if you are responsible for $200 a month, we add that to the total of all of your other debt to see what that percentage is. So giving you an example, if you make $5,000 a month and all of your debt adds up to $2,500 a month, that means your debt to income ratio is 50%. That does not make the bank want to lend you money because they're like, you don't have enough left over to pay for a mortgage. In our mind, we're like, well, I still have $2,500. So if I have, if it comes up to 4,000, I'm good. That's how we think. That's not how the bank thinks, because for them, that's risky. Because if anything happens to you, you can't afford to keep the house and you go into foreclosure. And that's not what they want, because they lose money. So that's why they have those guidelines and the income tiers to make sure that they're comfortable taking a risk on you. So we do need to get those numbers down. So let me see if I answered that. Perfect. So you guys decide you're ready. What does it mean when you're ready to purchase? We're going to make sure that we have your credit. I want to get you to at least a 640. So I'll let you know that now. If you're not there, that's the minimum. I really like to get people to 680, but we're going to try to get you to the 640 because when they pull your credit, it's going to drop a little bit, right? So you always want to give yourself some wiggle room. So that's why I prefer higher. As high as we can get you by the deadline, it's good. We want to make sure that you have met your down payment and savings goals. And then looking at options, right? So if we know based on your income, you're going to qualify for all of these down payment assistance programs, we won't be so aggressive with your savings target versus if we think, you should have extra just in case, then we're going to do that. And then making sure you accomplish your debt to income ratio, which I'm going to hammer that a lot because that's what hurts a lot of people and they never understand it. And they get really upset about, why did the lender pre-approve me for so little? And when you look at how much debt you're carrying, like a lot of times that's why. So we want to make sure that we're addressing that. Okay. So specific to Saige on Fountain, this project is under construction right now. So if you drive by 25 Fountain Street, you're not going to see a building. You're going to see that they are setting up for the foundation. And it takes them the whole process about 12 months or so. So it should be completed by the end of the year or top of next year, where it's done and you should be able to start moving into the units. The reason why we're starting the outreach now is because a lot of times from being in real estate for a few years, people don't pay attention to development projects and say, I want to buy until it's done. So when it looks like what you see on this photo, that's when people care and say, let me go get a pre-approval. If you don't have money saved, if your debt to income isn't where it needs to be, if you don't have your credit score where it needs to be, you're going to be really disappointed because you're not going to get a pre-approval and then you can't buy in this opportunity. And I see it all the time with all the development happening in Boston. People see it, they like it, then they go get a pre-approval, but they didn't do all the work needed before that. And that's what we're trying to solve here. So the developer wanted to make sure that anyone who was interested, make sure that they're qualified. So when this comes up, he's confident that when you apply, you're not going to get denied, and that it's going to be truly affordable for you, right? Because affordability, one portion of it is the price, but then the other is the cost to you. So if your credit is not great, your interest rate is going to be higher, which means your monthly payment is going to be higher. And that could mean the difference of you qualifying and not qualifying. So all these things play a role in if you can buy or not. So the timeline is kind of, we want to make sure that we get you guys ready, get your buyer profile where it needs to be. The lottery, depending on construction delays, so snow, materials, all those things are factors that come in that we can't predict. So it's, if everything goes according to schedule, we're looking at late summer for that lottery announcement. And when that happens, I'm going to reach out to all of you and say, guys, we need to start getting our pre-approvals to talk to the banks so that you can apply for this. And then once you have your pre-approval, we can help you fill out the application to meet the deadline. If you're fine with doing it yourself, fill out the application yourself. But we're here to add that support so that, again, you have someone kind of dotting the I's, crossing the T's with you for you to submit the application for the lottery. Once we have that and your application is submitted, then they go over everyone's paperwork, and then they have the lottery. The lottery occurs, they give you your number, then they sort through it and you decide if you're selected, if you want the unit or not. The great thing with this is, really, if you're at the front of the lottery, so the lower numbers, like 1, 2, 3, like those, the first 40, I guess, you get to pick your unit, right? So it's not where they're saying number 1, you get unit 1, number 2, you get unit 2. Whoever those first people are, you get to pick which unit you want that you qualify for. So if it's a 1-bedroom, you get to look at all the 1-bedrooms and pick the one that you want. If it's a 3-bedroom, you get to look at them and pick the one that you want. So you kind of get first option after you get selected for the lottery. After that, you're going to sign the reservation agreement saying, don't sell this to anyone else. I want to buy it. Here's my deposit. Hold it. We go back to the lender. The lender digs deeper into your finances. So we need to make sure things don't change. Then you sign purchase and sales. Once you sign that, you make another deposit. And then you're just waiting for the lender to do what they need to do with your finances and say, yep, we are absolutely sure we want to lend you all this money. Sign on the dotted line and the house is yours. And then we go to closing and the house is yours or the condo is yours. So that's kind of the process simplified. And we'll go over it in greater detail during the course of the next 90 days. Here, I wanted to give you guys kind of a breakdown. If you go to the website, I encourage you to go to the website if you have not already, saigeonfountain.com, and you can actually click through each of the units and do a tour. Hello? Okay. You can click through the units and kind of, it's as if you're there and walk through each unit. So I encourage you to do that because you get a feel, and it was designed to be, what's the word? Accurate spatially. So you're getting a true feel of what it would be like to live there. There are 32 studios and 1-bedrooms available, and the size ranges around 600 to 700 square feet, depending on where the units are. Some might be larger than others. And then again, showing you guys the sales prices. and how much it's going to cost, an estimate of your monthly housing cost. Again, that housing cost is dependent on your buyer profile. So your credit score, all of that plays a role in how much your housing cost is. And then also what will interest rates be? Right now, they're super low. We're hoping that they stay super low, but they do have a buffer in there where you would be okay with these. I'm going to go over the whole presentation and then look at the questions because I'm getting lost in it all. So bear with me. For the 2 bedrooms, there are 6 2-bedroom units. They're about 1,000 square feet. And again, looking at the sales price and how much it's going to cost you. And this is at the 80% AMI. You're looking at less than $1,700 a month for these. Again, this is based on your buyer profile, so results may vary. And then for the 3-bedroom unit, there are 2 of those available, and they're about 1,500 square feet. It's 3 bedrooms, 2 bath. And people always say, well, it's an affordable, they suck, there's deed restrictions, I can't rent it out, I don't want to buy them. And I understand that, and I think those are valid concerns that people have. And kind of my counter to that is, this is for people who have to live in Boston, or they're adamant that they want to live in Boston, and the prices of market rate Boston does not work for their budget or their finances. So this is what the city has worked with developers to create housing where it's priced so that you can purchase it. And the caveat to that is, well, if we're putting in all this money, we need to keep it affordable for years to come for the next buyer. Hold on. If you guys can mute your phones or your devices, that would be greatly appreciated. So for these, again, we're going to go over it over the next 90 days. What are some strategies that you could utilize to make the best of this opportunity? I will say I've had clients in the past where they've bought an affordable unit and they were still able to profit, $100,000 on their home. Someone was able to profit $200,000 on their home. It depends on how long you keep it and what the market's doing, which is something we don't have control over. So if the market is up, then you're going to do really well. If it's not, then you just don't make as large of a profit. But the goal long-term is that you're saving money in the immediate. When you own it, you're paying what? $1,300 a month for that studio, whereas everyone in the market's paying $2,000 for the exact same studio. So you're saving $700 a month. What are you doing with your $700? So that's kind of where we want you guys to think and start taking this. How do you leverage this opportunity to take you and your family to the next level? And we're going to go over that in depth, kind of over the next 90 days. So I want people to understand that. So it becomes less about the deed restriction and more about how do you leverage it to make it work for you in the short term and then in the long term as well. This is just a photo so you guys can see, like, Saige is for you guys. We're building it so that people can connect, so that you have that. I always say, we have the branding as luxury at a price that you can afford. And it's because it's going to be a really well-built project with quality materials. And this developer, I can speak because I've worked with him on a few projects already. He cares. And he's always said he wants his legacy to be the projects that he's worked on. He's like, when I'm dead and gone, I want these buildings to still be standing. I want the units to still look great. I want the quality to be there so that when people talk about my work, it's positive. So he's not going to cut corners and try to, nickel and dime and cut, that's not him. He's going to make sure that it's built to the standard that it needs to be. Hold on, before I go there, let me just look at some of these, if it's anything here. Okay, so I'll answer those. Okay, so what is the program? What does it entail? Why are you guys talking about contracts when you call me? Like, what's the deal, right? I've had a few people kind of inquire about that. So we want you to accept the challenge and say, yes, I want to move forward. I need that help. I need that support to help me kind of follow through on buying my house. My goal is to be a homeowner in 2022 or the next 2 years. Help me make that happen. The contract is, we're committing to you guys really for the next year, right? It's until this is done. While it's under construction, we're committing to you even after the 90 days. It's not where the 90 days is over and we say, see you later. You will be hearing from me. You will be hearing from Vixen every month at a minimum. Not to be annoying, it might be a text message, an email, or a phone call, even after the 90 days. And that's to see where you are, that you're not, some people, they do the 90 days and then they go buy a car and their debt to income is, they just sent it up the roof again. So making sure that you're sticking to the plan until these units are available for the lottery so you can apply, right? Or until you're ready to purchase, don't mess up your finances. So we're going to keep checking on you even after the 90 days. So that's why we want you to commit to us. We're committing to you. We want you to commit to us for that time frame. This, again, it costs you guys nothing, but there's a lot of time and effort and planning and counseling that goes into this. So we want to make sure that you are committed. That's why we're asking for you guys to sign that contract. It's not your typical, I think when you see contracts with real estate agents, where it's like you're locked into this person. This is more of a, we are putting in the work to make sure that you can apply for Saige on Fountain. You can apply to purchase a home and get a pre-approval from a lender. And we're saying, please commit to us because we've put in that work. So that's really what the contract is. If you're saying this was awful, I don't like it at the end of it, then you let us know, right? And you can say, I'd like to cancel that. We are going to put our best foot forward, and we will provide great customer service and client experience to make sure you get to your goal if you commit to yourself. Okay, it's going to be an online course. So you guys are going to have access to the Facebook group once you say yes and you sign the contract, where we have all of the recordings already done for you. We have a workbook that we've kind of put together so that you can follow along and track what you're doing, so that you can see your improvement or not over time. So we know what we need to work on. And then we're going to meet on the first and third Wednesdays of the month. We want to do it twice a month so that you have one to do. The first Wednesdays more, we're addressing saving strategies, credit issues. So we want it to be where it's focused on those two things. So if you have credit questions, you're coming on that first Wednesday. And then the third Wednesday is where we're going to focus more on your debt to income and like your nuanced situation. So if you are self-employed, if you were furloughed for a couple months and now you're coming back, can you buy a house? We're going to have a lender come in and they'll be able to answer from a lender's perspective. So you're getting it fresh. What did it say? From the horse's mouth? Specific to what lenders are looking for and what they will accept or deny, right? So we kind of broke it up into 2 sessions. We encourage you to attend all of them. It will be recorded and shared, but we want you to attend to ask your questions. We're going to send out an email and a text before each meeting so that you can submit your questions ahead of time so that we can maybe, add a little bit more structure to each meeting and make sure that all of those questions are answered. We are going to send you guys progress report request. So again, it's self-paced to a certain extent, but we want to make sure you're sticking to the plan. So you're documenting in your workbook, and we're going to ask you to submit kind of what you've recorded to us so that we can track it and see, where we need to add that additional support for you. Again, put your questions in the Facebook group. You can email it to us. We want to make it so that everyone sees the questions. Unless it's personal, you can send that to us individually. But we're still going to post the question publicly, just not with your name or your information, because a lot of times you're not the only one in that situation. Okay, so what What do we expect from you guys? These are videos, it's self-paced. We want you to do it. We want you to attend the accountability check-ins. It's 1 hour first Wednesday, and then 1 hour. That's 2 hours out of the month that we're asking you to commit to us, 2 hours where you're going to be with us. And then the rest of the time, we're going to send you reminders to watch the videos, depending on your situation, which ones we need you to focus on and complete the task. You're going to communicate. Don't be afraid. I've had people in the past where they had to borrow from their down payment savings to pay for another emergency. And then they avoid me because they're like, I disappointed you. I had the goal and I messed up. And I'm like, no, you had the money where you could. Whereas at the beginning of this, you had $0 in your savings account. It delays you a little bit, but you're not spiraling financially. Like, you had money to deal with an emergency. So understanding all of that, make sure, don't be afraid. Don't avoid us when you're going through stuff. Just let us know. And that helps us not panic either. Because sometimes I'll be like, okay, I haven't heard from you in now 2 months. Like, why? What's going on? Call me back. Just send a text or an email. Done. So we know just to check on you and make sure you're okay. Okay. So that was the presentation. Now I'm going to go through and look at all of the questions, and then you guys can just ask your questions after. So let me just go through. Yes, it will be recorded. Does the 1+ mortgage help someone who has a low income? Yes. So it depends on what your income is. And again, it doesn't matter how much you make. Technically, almost anyone can get a pre-approval from the bank, right? Your income determines how much you can afford. So your income is what determines if you get pre-approved for $100,000 or $500,000 or $1 million. That's, your credit doesn't get you there. It's how much money you make. So even if you're making a minimum wage, you can get pre-approved, right? What that number looks like is what we'll have to figure out, so that at least you would know, everything being, best case scenario, this is around what you're looking at. And I think for some people, and that's where, some of my passion is where I'm going to talk to you about that. And it's, if it is where, you're not making enough money, what do we need to do to make more money? If the job isn't going to pay more, can we look for a better paying job? And we can research that and figure out what that is, and move towards that. Like, it's okay to want more. You should. So if it is that you're not making enough, go make more. You control that. The job doesn't, you do. You can leave them and go somewhere else. So those are some of the tough conversations I have with people, and I will have that with you guys if it applies, because again, you don't have to accept the minimum wage. There are lots of opportunities out there. We can help you find better paying jobs. And if it is where we need to improve skill sets, connect you to the resources so you can do that, right? We just talked about the student loans. Can you still be denied a loan if your credit is more than 620, but you have some negative accounts on your credit? The answer to that is yes or no. So you have above the 620, so you're good to go. They've issued you the pre-approval. It's when it gets to underwriting, it really depends on the underwriter sometimes, what they will allow to slide and what they won't. Depending on what's on your report and what's in collections, they ask for a letter of explanation, and it's if they believe you or not. So to be proactive, just work on getting things removed. We have, for this specific project, you have at least 6 months to put in the work to get things removed off your credit report. Put in the work, right? And that's why we're doing this, because we don't want you to, apply not knowing any of this, not addressing anything, and then getting denied. We're trying to be proactive as opposed to reactive. So that's why we want you guys to start working on these things now. Someone asked, why a 640 for the credit score? Lenders determine what they're willing to take a risk on. So if your credit score tells a lender on paper how responsible you are with money. So do you have a history or a habit of borrowing money and paying it back on time? Do you use too much of the money that they give you? So if I say you can borrow $1,000 and every month you borrow $1,000, you pay it back, but you borrow $1,000, what does that say? So they're looking at your spending habits and your ability to pay. So like, how do you pay? Your payment habits as well. And that's the risk that they're willing to take. I'm willing to accept someone who has a 640 credit score. I am not willing to take a chance on someone who has a 580 credit score. So they set that threshold. Some lenders, they don't go under 700, right? They determine how much risk they want to take on a buyer. So although for this program I was talking about is a 640, for others, it's a 700. So if you don't have a 700, you're not getting that loan product, right? So we just have to make sure we get you as high as possible so you qualify for as many things as possible. Are HELOC loans or credit good to use? Teresa, if you're still on, do you want to ask that out loud or just explain it a little bit more? No? Okay. So what I think,
Okay.
Yep.
I am here, sorry. Well, actually, a coworker had mentioned it to me that he actually uses a HELOC loan, credit, actually, not a loan,
Yep.
credit. He had already purchased a home, and he uses it as like extra for emergencies or something. So I wasn't sure like exactly what it is and how does it play into as far as the home.
Gotcha. Okay. Yes. So to purchase a home, if you already own a home, you can use the HELOC, which is a home equity line of credit. So it's like your house has value. So you bought it for $200,000 and now the house is worth $1 million, right? So you have $800,000 in equity, which is the difference between what you owe and what it's worth. And you can go to the bank and say, hey, I have all this value in my house. Can I borrow from this to do other things? And they say, let me check your credit. Let me check your debt to income. Same thing as if you're trying to get a mortgage. I'll lend you some of that money. So let's say they loan you $500,000. So now your total debt comes to be 500 plus the 200. So that's $700,000 total, right? But you can take that 5 and go buy another property with it. Does that make sense?
Yes.
But if it's confusing, let me know and I'll simplify it.
A little bit confusing.
Okay. So it's like your house becomes a credit card.
Okay.
So they tell you what your credit limit is on your house. So how much you can borrow from your house at any time. And you could use that money to do whatever you want with it. You could go buy a car, buy another house, go on a trip around the world. They don't care what you use it for. They just give you the money because they know your house has value.
Right. Okay.
And they trust from your credit and your debt that you're going to pay it back because you've always done it. So they trust you to loan you money. Does that make sense?
Yes.
Hopefully I did a better job the second time.
Yes.
So that's what the HELOC is. That if you own a home now, Saige on Fountain doesn't work because it's only for first-time home buyers.
Right.
But it does work if you're just trying to buy a second property in general.
Okay. I gotcha.
So you can utilize that. You do need to have good credit, period. I tell if you don't have at least I say 680, but for these programs, say 640 is a minimum, work on it. Right? There's no excuse to leave it there because everything is more expensive. The best interest rates, the best products go to people with the best credit score. Just work to get it higher, right?
Right.
So worth it.
Okay, so I am not I am a first-time home buyer, so that actually wouldn't work for me, the HELOC.
Correct. It's only for people who own a home.
Okay.
You have to actually own a house to borrow against the house.
Okay, gotcha.
Okay. So he can use it to purchase another property.
Right.
You'd have to purchase a property and then see what equity you have and you could use it.
Right. Okay. All right. Thank
Okay.
you. That was
No
great.
problem.
Okay.
Whitney answered the question earlier. So it depends on what's on your credit or what negative information is on your credit will determine if the lender will deny you or not. Again, if it's explainable, if it makes sense, and depending on what it is. Will you be able to reserve the study rooms or wellness studio or the TV lounge? That's a great question. Right now, the developer does not have a requirement on any of that. He's leaving the condo documents as loose as possible so that when you guys take ownership, you'll be a condo association. So there'll be 40 members or 40 owners, and you guys can decide how you want to do that, right? As opposed to him putting all these restrictions and the majority of people don't like it. He's like, I'm going to do the minimum, but making sure you guys are protected. So what he's done is make sure you have a reserve fund. Make sure all those major things that first-time home buyers don't think about is secured. Make sure that you have a property management company who's looking after the building, doing maintenance, checking on things. That's what he took care of. And then for the condo rules and bylaws, he's going to have the standard things in there. But in terms of like what to reserve, what not to reserve, at this moment, he's leaving it for you guys. I can follow up with him and see if that's changed. But I remember when speaking with him, he wanted to leave it where that's more of an association to decide what they want to do. And then you can amend your bylaws. And I don't know if someone asked later on, but for the parking spaces, right now it's not assigned. So it's going to be first come, first serve. So everyone does get a parking space. So there's one parking space per unit, but they don't have it where, parking space number 3 goes to unit number 3, not at this time. So I don't know if they're going to change that later on or not. But at this moment, it is kind of, you just pick your spot when you get there, just like you pick your unit. Do you get to tour your unit to see before moving in? Yes and no. So you guys are going to be in the lottery before it's completed, right? So as long as it's safe enough for you to enter to get a feel of like the size and the layout, you can do a tour. But most likely, it's not going to be complete where it's like I view it today and I move and I decide if I want to move forward today and I can now wait. So you'd have to kind of make the decision that you want to buy it, and then you would get the tour of kind of the near finished product closer to your closing date, if that makes sense. So we will have tours when it's safe for you to go into the building beforehand, but you're not going to get to see kind of the finished product until closer to the end. Someone asked if the contract can be canceled. Yes. So the contract, again, is for 12 months because the project takes 12 months. So that's why we're saying we're committing to you. You commit to us. If you're saying you guys are awful, I don't want to do this anymore. That's with anything, right? You can cancel a contract. It's just where it's respect and letting people know and providing that feedback on why, why you're canceling. What if you don't have Facebook? Yes, we're working on that as well, so that you guys can have access to it if you do not have Facebook, so you can still complete the course. Is that the only place the course will be live? And then we will have our monthly meetings. So like this, today is more of just the introduction, but it's going to be every 2 weeks. And if you guys don't have questions, then we're going to have something to share with you. But we want you to utilize those hours to ask your questions. Yes, you can join the 90-day challenge, even if you don't have Facebook. Does the contract give you priority? Nope. The lottery is the lottery. And that was designed to make sure that it's fair and equitable for everyone. What we're doing is outreach, because what I've realized in my years in real estate is people from the community, we tend not to know about things or pay attention to it until it's done, until it looks like, it's ready to move in and it's too late. So this 90-day challenge is geared really to just getting you prepared so that you can enter the lottery. This lottery is not like the city of Boston, other affordable lotteries, where people who are in the list 2 years ago are still, eligible for this as long as they update their information. This is one where only the people who apply specific to this building are entered into the lottery. So it's going to be a lot less people and a lot less competition. So your advantage is you know about it now. And as soon as it becomes available, I will reach out to you, and you'll get updates every month anyway on how the project's going, if there are delays or anything like that, so that you can apply for it. So there's no preference because you're in, or priority because you're in the 90-day challenge. There is no fee for the contract. Yes. So if you are doing the challenge and then you say Saige isn't for me after all, our agents can help you still find a home. So it's not restricted just to this project. And it really depends on your situation, right? Like I've had someone where they had, family had to come live with them. So they were a 2-person household and then they quickly became a 6-person household overnight. So for them, it no longer works, right? But they just had to adjust their plans so that they could still purchase something. Okay. Is the contract binding you to purchase a property on Fountain? Nope. So the contract is, we're going to help you get in a position to, when you speak to a lender, and you submit your documents, they're going to issue you a pre-approval. That's really what the contract is helping you do. And then saying, if you're going to purchase a home, that you're going to work with us. It's not binding you to Saige. It's binding you to your commitment to be prepared for Saige, if that makes sense. So it's really you saying, I really want this. I have my target and I'm working towards it, and I'm committed to working towards it. And that's to protect us to a certain extent. And it's also for us to see who's really motivated, right? Because some people join things all the time. Like we've done this 90-day challenge before, and a lot of people registered, but it boiled down to a handful of people actually committing to it in the end and following through. So it's really making sure, or, what's your commitment to yourself? And we didn't have contracts, that time. So kind of learning as we do different iterations. Are only people chosen in the lottery eligible for a condo? I think it's Jay Dozier, if you want to explain that a little bit more. I think what you're asking is if you're selected in the lottery, is that the only way you're eligible for the condo? Yes. So how the lottery works is, let's say there's 100 people that apply and are eligible for these units. Then they number everyone 1 to 100. And then they don't put it in a hat, but I'll say they throw everyone's number in a hat so they don't know who's who, so that they don't see your name, so there's no discrimination if they see a name that they don't like, or it's numbers. They pick the numbers from all 100, so whatever number comes, they pick all of them and they kind of rank them, and then you're called according to how you're selected. And then it's to you to decide if you want to move forward or not. And I tell people lottery homes or affordable homes are safety, and everyone should apply to them because you have no control over it. It's a lottery. Apply. If you see something else that you like and it's market rate and you love it, go for that because it's market rate. If it is where the condo is your option, then the lottery is it for you, right? So it depends on what your situation is, what makes sense for you. These, to me, and this is Denisha's personal opinion, who's the ideal buyer? Someone who really wants to live in Boston, specifically Roxbury. Someone who's okay with the unit size. Like you guys saw, it's predominantly studios and 1-bedrooms. The developer is really sensitive to the fact that studios, I'm like, I am a person of color. We don't do studios. Your kitchen should not be your living room, should not be your bedroom. I don't like it. And he took that feedback and made it so that the studio feels like a 1-bedroom, even though it's a studio, according to all the guidelines. Make sure you checked all the boxes, but it has the partitions so that you feel like you're in a 1-bedroom. And that makes it more palatable. And I'm like, I would actually live in the studio. I like it. So again, he takes all this feedback, and we held focus groups in the community to make sure what he built is what people said they would want to live in. So you get to choose, what works for you. And if it doesn't work for you, then we help you find what works for you in your situation. Hopefully that made sense. Can someone on Section 8 get help paying the, yes. So I think you guys got the email, and I'll send it out again. February 16th, which is not this Wednesday, not next Wednesday, it's the Wednesday after. So 2 Wednesdays from today, which is actually the 3rd meeting, will be on Section 8 to home ownership. And we have 2 meetings. So you kind of have to pick which one. I have the Section 8 to home ownership for those people who have a voucher and want to purchase a home. And then we have our regular accountability group for those who do not have a voucher, but you want to move forward with the program. At that meeting, we're going to talk about how you take your voucher and you use it to buy a house or this condo. And it works almost identical to your rental voucher. The portion that you're responsible for is what you're going to be responsible for when you own. And then the voucher will cover the difference. And they adjust every year. You have to recertify. So they base it off of your income annually. They adjust it. And then that's good for 15 years as long as you're eligible. And after that, they're saying you should be in a financial situation where you can carry your mortgage after that 15 years. So you can leverage your Section 8 voucher to purchase a home. If you have any family members who sounds like a great idea, encourage them to attend that event so that they can have the step-by-step of what they need to do and how to leverage their voucher to purchase a home. You can only buy condos and single families with it. You cannot buy a multifamily with the Section 8 voucher, okay? My student loan balance is high, but my monthly payments and income base are pretty low. Will the lender use the total balance? They never check total balance. So you could owe $100,000 if your monthly payment that you're responsible for is $100. That's what they're checking. They're not checking the total. Even your credit cards, like they check what you have to pay every month, your monthly minimums. Someone said they're not sure if they want to live in a complex, but they love the affordability of the condos. Again, that is a personal preference, right? So we try to build the best product. We understand it wouldn't work for everyone, but we wanted to build affordable homeownership opportunities for the people that would love to live here, right? There are a lot of different projects being built all around Boston. If this one isn't the one for you, maybe one of the other ones is, but we try to build a project that, again, fit the need of at least an unmet demographic. Can you use other things like paying rent and utilities? Yes, you can. To improve, sorry, I didn't read. Can you use rent and other utilities to show on-time payments to improve your credit score? Yes, you can. But it depends on the lender, because not all of them say yes to that. Some lenders use alternative payment options to help you qualify. There are programs that do that. And really right now, you're 6 months ahead, you can work with Kings and Queens Consulting to figure out which credit cards to apply for. So you build a credit profile for the lenders, right? So that's a strategy right there. Are there condo fees? Yes, there are condo fees. It ranges, it's around $300. That's included in that number that I shared with you guys on your total housing costs. that's including condo fees. So it's already in that number. So it's not like you're adding it to that. What about single fathers whose income is cut more than half due to child support and resources? We can talk about that. I'd have to ask. That would be a question for when the lenders are present to see what they say are strategies. But I think it comes out like it's whatever your income is net after all of that is what they look at. So we'd have to probably figure that out. The person asked, can you have a condo building committee? Yes. So all condo associations have a board and they're supposed to have meetings. If not monthly, then some do it quarterly and some do it annually. It depends. So it literally depends on who you guys vote for to be on the condo board and then how often you want to meet. Because some people want to meet every month and some people like, I don't want to come to anything. Send me an email with the summary. I'm good. We can vote electronically. It's okay. So it depends on you guys. A lot of, there's a lot that goes into that. But really it's designed, this project is so that you guys think of community. And we want people to engage and interact with each other. That's why the amenity spaces, like, I think there's a lot of amenities in this compared to typical Boston condos, especially affordable condos. They don't have any amenities. So this is trying to create that experience that others have. You do not get to choose your finishes. What you get is what you get. So you can upgrade it or make changes once you take ownership, but what's there is there. It's standard for everyone. Is there a cost for the first-time home buyers program? For this, no. For the course that you have to take to obtain your certificate from the city, I believe it's $25 or $30, depending on which organization you take it with. And if you want to do a self-program, a self-study, so online, that one is $75. I can send you guys a list of first-time homebuyer programs to sign up for if you want to do that. If you go to CHAPA, CHAPA.org, you will see the list of all of them around Massachusetts. So you can pick the one that's best for you. Is there anything that can cause you to lose your spot in the lottery? Once the lottery numbers are set, it's if you don't answer your phone or email when they reach out to you to say if you want it, is how you lose your spot. And if you don't pay the deposit, right, you can't move forward. Really, there are preferences. So there's a City of Boston resident preference, where, if you're applying and you live in Brockton, then people from Boston will have a preference, depending on how they tier it. We'll have a session on how the lottery actually works for you guys closer to the lottery, because I'm not the expert. I know a little bit about it, but not all the intricacies. But once the numbers are assigned, the final numbers are assigned, they literally go down and call each person in order and say, do you want this or not? Come in, take a tour, decide which one you want, sign the reservation agreement, pay the deposit, it's yours. If you miss the call and you miss the email asking you to come in, then they move to the next person and you're no longer eligible. So it would be if you miss it. So if you know that when this lottery is happening, you're going to be on vacation and you're traveling, you let me know, so that I can be in communication with the lottery agent. And if you give me access to how I can reach you, should you be out of town, then we can try to coordinate that to make sure that they have access to you, because you do have to respond and talk to them to get that unit. Studio is, yes, the studio is not the typical studios that you see in Boston that's like 400 square feet, like a closet. It's a pretty big studio. And even the one bedroom, 700 square feet, I've seen 2 bedrooms at 700 square feet. So it's like these units are really decent size. Can you change your bedroom preference? Yes and no. It is based on household size. So it's whatever you're eligible for is what you have the option. You cannot be a 1-person household and request a 3-bedroom, right? Preference will always go to household size. So a 1-person household, you're eligible for the studio or the 1-bedroom. A 2-person household, depending on the combination, the studio 1-bedroom, maybe a 2-bedroom, again, depending on what that makeup looks like. So it's always going to go to kind of your best chance is in whatever your household is to the bedroom count. And then how would you get, if you're a 1-person household, how would you get a 3-bedroom? It would be if everyone on the 3-bedroom list said they don't want it, then it turns into first come, first serve. And then you have the option to pick that or not. And I've seen that happen before in lotteries where people have said no to homes, and literally it went down the entire list of applicants and it went to someone who was a smaller household size. So it is possible. Would I need to take a condo home buyers class? You'll have to take a condo education class, but you don't have to take that before you are selected. Yes. So if you're not selected for the lottery, we do work with you to help you find another home or another property. This developer, this is not the only project. So even if you wanted to look at another affordable, they help you with that as well. They are going to be working on some home ownership units on Blue Hill Ave, closer like Mattapan side. So that's another project that's probably going to start next year. So it's going to be, it's everything takes time. So there'll be a lot more coming in the future that we can keep you, if you're looking for new construction, we can keep you kind of in the know. You guys are kind of on that special list to know about these. And then any other opportunities, right? So if you're looking to buy a home in general, we can connect you to one of our agents to see how they can help you. And yeah, so this developer, there's going to be another project in Mattapan. And then we're looking at possibly doing something in Brockton. If that goes through, I'll be reaching back out to you guys so that you become like the focus group for that project to make sure what they're building is what you would want to live in. That's kind of what I do. What I enjoy doing is getting people's feedback and building to what you want. Like Saige came out of focus groups, community meetings, people saying, I hate this, I love this, I want this, this is mandatory, else it's not happening. And then we built Saige, right? So I love your feedback. How does it work? So how does it work if you grow in family size and you want to get a bigger unit? So this is not a rental where you just upgrade. If it is where you purchase, so you own it, you're living there, and let's say 2 years later, your household grows and you're like, I can't make this work. We can't live here. We need a bigger place. You would have to sell it and then use the equity from that to purchase the next property. I will say something that people, a misconception out there is that you need, if your first home is the low down payment and your second home is 20% down. Not true. You can still purchase with another loan product with a low down payment. So you can still leverage this unit to then purchase your next unit later on. Is Saige geared toward a younger demographic? Nope. It's based on household size, honestly. So you can be a recent college grad and you need a 1-bedroom, or you can be a 50-year-old, all your kids have moved out. You no longer need a 3-bedroom rental. You're like, I want to own something. I want to buy it. So it's not a younger or older demographic. It's more household size and what works for people, right? You can't have 4 people living in a studio. So it's more based on the household size than it is a younger demographic. And that's just because what we've seen is there's an abundance of 3-bedrooms throughout Boston. And what you find is a lot of people have roommates, they're driving up the cost, because if they each can afford to pay $1,000 a month, that 3-bedroom just became $3,000. Once one landlord gets 3,000, they talk. And once the neighbor knows that his friend got 3,000, guess what his price is? $3,000, even if he was charging 2,100 before. That's why the market's gone up. So it's how do we start pulling some of those roommate situations into just own your own space. If someone's downgrading from a 3-bedroom or a 2-bedroom and they want to live in a studio, they want to live on their own, how do we make that affordable for them? Because it really is a lot cheaper than renting. They will all, so this question is, what happens if you don't answer? Will they leave a message? Absolutely. They will leave a message letting you know that, you know, they're calling regarding Saige on Fountain, you were selected, please call us back, and they'll give you a deadline. I think it's 5 days. Don't quote me, it could be 3 to 5 days to get back to them with a decision. And if they don't hear from you, then they'll move on to the next person. It's usually a phone call and an email. So you'll know. Are there restrictions about subletting if you travel a lot? At this time, you can't, I don't think there are, so don't quote me. I can find out and get back to you. I don't think there are restrictions on subletting, but it's probably going to be a timeline, right? So it's not where you can just rent it out for a year. They're probably going to put stipulations there. I'm still finding out about like Airbnb and all of those other options out there, kind of what those guidelines are. So let me find out about that question and get back to you on that, because I don't know the answer. I don't want to misspeak. So I'll get back to you. Is the developer looking to build in Dorchester? Why only Roxbury and Mattapan? No, the developer is looking to build wherever land is affordable. So if anyone knows of land opportunities to purchase, he will gladly build and purchase the land. Real estate, I think a lot of people go, well, why don't you do this? Why don't you do that? Because it costs money. And it's understanding the economics of that is what makes things feasible and what makes it not feasible. You see a lot of luxury units, more so than you do affordable units, because developers don't make money on affordable units. That's why. If you sell luxury or you sell market rate, it's a bidding war, right? I could say I want $500,000, but if someone says they want to offer me $600,000 and the appraiser says, yep, it's worth that, I just made an extra $100,000. Whereas with an affordable, they're actually selling at a loss. Let's say it costs $500,000 to make it. Then the city and other funders come in and say, well, buyers in this income tier can't afford that. So we're going to buy that down. So they're going to pay $300,000, for example, so that you can buy it at $200,000. So although it doesn't cost you the full price, it still costs more to build it. So that's where, again, building affordable housing is not as easy as people think it is. Not just go build it. Like there's actually cost and it's expensive. It's more of, can the developer put things together to make it feasible to build affordable? So if you guys, someone put in here if they're willing to build in Lynn. If you know anywhere where someone's willing to sell land and they're willing to negotiate on that price, whatever it is, reach out to me and I can connect you guys to the developer. He's willing to build wherever it makes sense. So if people are going to buy there, he will build there. You know, he's like, I'm not really going to go to Western Mass. I don't know that market. I don't even know what buyers are there. So it's more of areas where people from Boston, so kind of this group that's here tonight, where would you go? Right? And based on that, then we can look for land in those areas because we know we'll have buyers in those areas, right? You don't want to build it and then no one wants it. That's the worst thing you can do. So it's really trying to build what you guys want. And that's kind of, for this project, everyone wants to live in Roxbury. And the seller of the land said, I want home ownership. I don't want a developer who's going to come in and build rentals and rent it to students. That's not what I want. And this developer said, you have my word, I will not build rentals. And he made it happen. So it's really when those opportunities arise, just picking the right person to give that to. And this developer, he holds true to his word. He builds market rate and affordable. So we call that mixed projects, and he's great at it. So we'll start interviewing some of, current homeowners of his past projects so that you guys can hear from them firsthand, kind of what the process was like. Because again, some of them bought market rate and some of them bought affordable. So you can hear what that process was like, kind of going through it all. How has it been living in the house? You guys will get to hear that firsthand because we will interview them and share that with you as well. Because again, for him, he wants to hear about his legacy, right? He's like, after all is said and done, I want to know that I made great buildings. So we'll have those for you guys. And I do stay in touch with you. So let's say you enter the lottery, you're selected, you move into your unit, you still don't get rid of me. I still follow up with you that first year to make sure everything is okay. If there are any issues with the property, let me know so we can work with the property management company to get them repaired. And then I just check in with you guys. I have people who've closed with him 3 years ago, and I still text them today just to check on them and see how they're going. And I get pictures as their family is growing. And, it's to make sure that you're still loving where you live. And if you have to move on, or upgrade, what does that look like? And what support can we provide for you then as well? Because again, with lottery homes, you don't determine the price. The city determines the price because they set how much you can grow in equity every year. So we now can come back to this list, for example, and see who from the initial group has not purchased a home yet. Would they be interested in purchasing your unit? So that's we're trying to build that community so that, again, it's just a seamless, easy process for you guys. I think I've answered everyone's question. If there's any more, you can unmute and ask, or you can put it in the chat. But I mean, that's all I've got. How much cooperation is the developer and the city doing since the mayor wants poor people to live affordable? I don't understand the question. But like I said before, affordable housing it's not just I want affordable housing and it appears. It's really expensive because contractors are not going to work for free. So their price is their price. Materials are not going to give you a discount. So the price of that is the price of that. So it's really trying to find all of the different funding sources beyond just the city of Boston, because that's not enough to make affordable housing. I'll tell you that right now. It's literally finding a ton of different partners to come in and say, here's money so that you can make this affordable to the community. So there's a lot that goes into it. And we can have a whole affordable housing session for those who care to explain what goes into it. So I think when I was younger, I questioned a lot of affordable housing and why are the numbers like this? Why isn't it lower? But now being in it, I understand. And sometimes it's not feasible. The developer would be negative, right? The project couldn't finish because it costs so much to make it, to sell a 3-bedroom for $100,000 in Boston. That's not possible. Although we would like that, you can't do it. Someone would literally have to say, I have $1 million and I'm just going to give it to you so you can make this affordable to people, because the city doesn't have enough funding. The state doesn't have enough funding to build a lot of those, right? They're going to put all of it. If it costs $500,000 to build it, they can help 2 people with $1 million, right? Versus if they could put in the 300,000 or 200,000 to buy it down, they can make it affordable to the next tier. So it's trying to just manage all of that. I don't envy the mayor and her job at all because it's not easy. Is the developer working with the city? Yes, we get assignments to work on each week to create savings and fix credit. Yes, so you're going to get assignments. You're going to have the workbook. So you'll already know what the assignment is because you have the workbook. But we're also going to send you emails and text messages to check in to make sure at least we're giving you some cues on what you need to do so that you stay on top of things. Okay, so next steps, you guys are going to hear from us in the next week so that you guys can sign the contract. And then we're going to let you into the Facebook group for those of you who have Facebook, and then onto the other platform. We'll figure out what the other platform, because we've only done it in Facebook so far, so that you have access to all of the training videos so that you can follow along throughout the next 90 days. Okay. So thank you guys. We are over time, so thank you for staying with us. If you have more questions, I'll be on here until everyone's out, so you can keep asking questions, but everyone else, you're free to leave. Have a wonderful, wonderful rest of your week.
Denisha?
Yes.
How do we get the workbook, like the whole process, sign a contract? You send that to us?
Yep, it's all going to be digital. So you're going to get an email, and it's going to be, the contract's going to be through Dot Loop. So you'll get an email where you sign it electronically. Once we have that, then we send you the link for Facebook, and we send you a copy of the workbook so you have it. So it's all going to be digital. You can print it after, but it's going to be digital.
Okay. Alrighty. I'm very excited about this whole process.
That's what we want.
We're excited.
I want to be a home buyer.
You will be. As long as you don't give up, you will be. That I can
I'm
say.
not giving up. This is a dream of mine.
There you go. So as long as you don't give up, we're going to make sure you're a homeowner.
Amen.
Thank you.
Have a good night.
Thank you.
Any more questions, you guys? You can sign off or you can keep asking questions. I'm going to just stay on for anyone who has, questions. Yes, it will be a disappointment if you're not selected for the lottery, but that is a do not give up. You keep searching and other opportunities come. I'm a firm believer in what is for you is for you. I'm a praying woman. So if it's not for you, it's not for you. And we find the next thing that is. Things fall into people's lap all the time. You never know. So have a good evening, everyone. We look forward to helping you over the next 90 days so you can get your savings in order, your credit in order. If we need to work on your debt to income, we're going to do that. Again, I forgot to say, we're going to try to have some incentives in there to keep you guys going, some little prizes for those of you who follow through on what you say you're going to do if you do it. So. Okay, so if there are no more questions, I am going to sign off. Did someone just join back on? Okay, no questions. I'm signing off for real this time.